Hello everyone, John AG here. In this kind of market, even a simple click can feel like pulling the pin on a grenade. One minute you're calm, the next minute you're staring at a chart thinking, did I just buy the exact top? Because I did. I bought gold and I bought silver right at the all-time high. Then something happened that I honestly did not expect. Before we jump in, quick and honest moment. I'm running a campaign to push back against copycat channels that recycle other people's work. If you value original breakdowns here, support me by subscribing and dropping a comment, even if it's just Arjagon AG, so the algorithm can see you're with me. And if you want daily updates, quick posts, and my personal analysis that I don't always put on YouTube, I made a WhatsApp channel for that. Premium style posts, instant voice notes, instant updates, link is in the description. Most people think buying gold and silver is like buying a stock. You enter at a price, you hope it rises, you celebrate if you win, and you sulk if you lose. But that mindset is exactly how people get emotionally wrecked in a metals bull run. Because when you buy metal, you're not just buying a shiny object. You're swapping one form of money for another. Paper money is a claim, an IOU, a system of debt dressed up like stability. Gold and silver aren't promises. They aren't liabilities. They're assets you can hold. And that's why even though I bought at the top, this isn't a sad story. It is a lesson. And that lesson matters most when prices are screaming higher and emotions are loud. Let me tell you what happened with silver first. I went into my local shop and saw a piece I liked. Not because I thought it would moon, not because an influencer told me to buy it. I liked it because it felt like real money in my hand. The price was sitting at record levels. Normally, that would make people walk away. The voice says, wait for a dip. But in a bull run, waiting can turn into waiting forever. So I did something a lot of stackers do. I put it on layaway. Layaway is a strange psychological tool. It locks your decision in while the price keeps moving. And while I was paying it off, silver kept climbing. Instead of regret, I felt relief. And that teaches the wrong lesson. It teaches that chasing highs gets rewarded. By the time I picked it up, silver was even higher. On paper, it looked like a win. But stacking isn't supposed to feel like a casino. It's supposed to feel like protection. And markets love to punish confidence later. A couple weeks later, it was a Sunday night. Thin markets, jumpy charts, that quiet panic set in. If I don't buy now, I'll be priced out. So I did something I almost never do. I bought gold online at the all-time high. It wasn't calm. It wasn't calculated. It was fear-based. Buying at all-time highs is like stepping onto a frozen lake. You don't know if it'll hold until you're already out there. Then something strange happened. By the time the package arrived, gold had moved so fast that what I bought was sitting under spot. I looked smart, but I got lucky. That's when it hit me. When fear gets rewarded, your brain starts thinking fear is a strategy. Fear is an alarm, not a plan. So I asked myself a hard question. If this had gone the other way, would I still think this was smart? The answer was no. People obsess over spot price, but physical metal has two prices. The paper price and the what can I sell this for today price. In calm markets, they're close. In hot markets, they're not. Premiums widen. Inventory disappears. Dealers protect themselves. You can win on the chart and still feel stuck trying to sell. That's not fear, huh? That's reality. If I walked into a shop tomorrow, would I get rich selling what I bought? No. Physical metal isn't for flipping, it's for protection. And the longer you hold it, the less those spreads matter. This is why dollar cost averaging matters. Not because it's exciting, but because it protects your brain. It turns chaos into routine. And routine is how you survive volatility. After that purchase, I asked myself, am I stacking or chasing? That question is the difference between a calm stacker and a stressed gambler. So here's my rule. When I feel urgency, I slow down. When I feel like I have to buy, I step back. There will always be another candle. If the market goes vertical and never corrects, something bigger is breaking. And owning metal matters more than price. If it corrects hard, disciplined stackers survive and emotional buyers panic. Gold and silver don't make you rich. They stop you from getting poor in slow motion. And that's the real win. So tell me, have you ever bought at the top? And what's your bigger fear right now? Missing the move or buying the high? Drop it in the comments. Even if it's just Arjagon AG, take care of yourselves. Take care of each other.